Frontline stocks see range-bound trading, but mid-caps put on a good show. Healthcare and consumer durables are the big gainers, even as FMCG and realty stocks lag. Honasa Consumer, the owner of Mama Earth, sees a large trade of nearly 11% of its total equity worth over 1,700 crore rupees. Private equity investors, including Peak XV Partners, are the likely sellers. The sale at a discount hurts the stock. The cabinet clears a new 10,900 crore rupee initiative scheme for electric vehicles, PM E-Drive, which replaces the earlier FAME. Besides two-wheelers and three-wheelers, e-ambulances, e-trucks, e-buses will also be incentivized, as would charging infrastructure, but there's nothing in it for passenger four-wheelers. Bajaj Housing Finance's 6560 crore rupee IPO gets subscribed nearly 64 times, with a qualified institutional buyer segment seeing an oversubscription of over 200 times. That's a stellar investor draw. And Interglobe Aviation owner Indigo Airlines will become a global airline by 2030. CEO Peter Elbers tells CNBC-TV18 in an exclusive chat he expects 30% of revenues from international routes this year. Hello and welcome to Business Lunch here on CNBC-TV18 in the Mumbai News Centre. I am Honasa. Let's first take a look at how the markets are faring this afternoon. And it's a very familiar script that is playing out on the Nifty. It's the weekly options expiry for the index. And we yet again tested levels of around 25,100. But yet again, we have struggled to survive at those levels. Currently still trading with gains of around 80 points, 0.3% higher on the Nifty, still around that mark of 25,000. So it'll be interesting to see how the weekly expiry plays out for the index. I pull up the Nifty Bank as well, and that was the one that led the Nifty lower in yesterday's trading session. Currently trading with gains of around 200 points. It's a very similar chart as the Nifty looks like as well, off opening highs, but continues to hold on to those levels of around 51,200. What's doing well in today's session? Metals is the top sectoral gainer today. The metals index trading with gains of over 1%. And finally, seeing some relief in today's session are the PSU banks. The PSU bank index is up 1% in today's session after 4 straight days of losses. And at nearing the highest point of the day is the PSU bank index. So some relief coming in for the PSU banks and the entire PSU basket in general. But the one stock we need to focus on is Honasa Consumer, and that is because of the large deal that took place in today's trading session. Nimesh is joining in with the details of that.
So as you rightly pointed out, the stock is under pressure, largely on back of a large block deal. So the private equity investors sold 11% stake via block deal today. In terms of buyers, I understand a mix of both domestic and FIs have bought. Interestingly, the domestic mutual fund holding is quite low in Honasa, just 3% before the block deal. So looks like they've participated in this block. Now the combined holding of all the private equity investors is close to 39%. They've sold 11% in today's block, and now there is a 60-day lockup. So further selling cannot happen for next 2 months, but that overhang is going to continue. The fact that the Ps are sellers there. The biggest private equity in that is Sikova, and they've been selling aggressively in other holdings as well. Looks like there is a bit of slippage as well because it happened at a discount, and hence you're seeing the stock under pressure. And of course, valuation is also a bit of a headwind, at least at these levels.
Nimesh, thanks a lot for that. The stock under pressure, as Nimesh was highlighting, 5% lower as we speak, and has remained at those levels since the start of the trading session. But on to some other big movers in today's session, being Zydus Life and Granules, both from the pharma space, and they are in focus on the back of the new US FDA observations. Ekta is here with those details.
Well, I'll start with Zydus Life. In a recent US FDA warning letter, which was issued in August 2024, Zydus Life Sciences Jarod facility was cited for multiple violations following an inspection which was conducted from April 15 to April 23rd of this year. The facility, remember, had already received an official action indicated status before this warning letter that had taken place in July 2024 after the inspection which had taken place. Now, key violations pointed out in the warning letter include the failure to thoroughly investigate unexplained discrepancies, inadequate investigations into contamination in drug products, and multiple cross-contamination events over 3 months. Additionally, the US FDA has also pointed out concerns on the inability to assess the root cause of glass particulate contamination, poor aseptic techniques, and failing to follow written procedures as well. Meanwhile, separately, in Granules, the US FDA has issued 6 observations to Granules' Gagilapur facility after an inspection which took place last month. And we've managed to access those observations now, which point to concerns such as unclean equipment, inadequate reviews of discrepancies, and repeated quality control issues. The US FDA has also pointed out a repeat observation from the company's Jan 2023 inspection. It has also revealed significant lapses such as microbial contamination in the air purification unit, including numerous fungal and bacterial colonies there. Observers have noted the removal of scrap materials, including GMP documents, which could point to data integrity issues, according to some analysts, and how the company treats this and responds to this would be critical. The Form 483 also pointed out, for example, unhygienic practices such as bird droppings and feathers on the air purification units, and concerns on the water tank, which had not been cleaned since installation and was found to possibly be in poor condition. So all these are very critical for the running of a good plant, and hence the company's response to all of these observations would be critical. But as of now, one can probably expect a longer road to remediation for Granules when it comes to this facility.
Some serious observations there. Ekta, thanks a lot for that. Showing up in the stock price as well. Granules at the lowest point of the day, now 12% lower as we speak. Not a significant reaction in Zydus Life as of now. But moving on then, Paytm, the payments aggregator, held their annual general meeting today, and the founder Vijay Shekhar Sharma spoke to shareholders and was committed to profitability, adding that the focus was on compliance first in business, now in letter and in spirit as well. Ritu is now joining in to tell us more from the AGM. Ritu.
Well, the big takeaway from Paytm's annual general meeting is the clear message coming through from its founder and CEO Vijay Shekhar Sharma that the company aims for profitability with a focus on compliance-first business, both in letter and in spirit. Now, important comments given that the company continues to post losses, with the first quarter net losses widening to 840 crore rupees, and that's been one of the big investor concerns, apart of course from the fact that there was regulatory action against its payment banking arm. Now, in response to these escalating losses, Paytm had in the last quarter announced an aggressive plan to save up to 500 crores annually on employee costs and also cut down the ESOP cost. In FY24, in fact, it achieved the first full year of EBITDA before ESOP profitability since the IPO, but the focus now, the company says, is very much on delivering profit after tax. At the AGM, the company reiterated that its priority is to grow the core payment business and cross-sell financial products. It aims to expand the merchant base from 40 million currently to more than 100 million, and then cross-sell and upsell financial products to this larger base to achieve growth. Vijay Shekhar Sharma also pointed out that Paytm is going to leverage advanced technology for financial services, including distribution of loans, insurance and mutual funds, and it sees opportunity to cut down costs further with AI adoption. Now, its subsidiary, Paytm Payment Services Limited, also recently got the FDI clearance from the government, and Vijay Shekhar Sharma said it is now going to reapply to the Reserve Bank of India for a payment aggregator license very soon.
Now we are talking compliance first business, a business that takes care of every regulation fully and in letter and in spirit. तो हमारा पेमेंट का बिजनेस मॉडल, जिसमें हम अपने कस्टमर्स के साथ बात करते हैं कि वो एक हमें डिवाइस लें हमारी और उससे पेमेंट प्राप्त करें, उसका सब्सक्रिप्शन और जो पेमेंट इंस्ट्रूमेंट्स हैं उसकी कुछ फीस, और यूपीआई जो आप जानते हैं जिसको कि भारत सरकार ने मर्चेंट्स के लिए फ्री कर रखा है, जिसका सारा का सारा कुछ एक इंसेंटिव एक तरीके से साल के एंड में हमें प्राप्त होता है, वो बिजनेस मॉडल एक बहुत ही रोबस्ट और स्केलेबल बिजनेस मॉडल है. परंतु अभी हम कोर पे फोकस रहेंगे, हम पेमेंट पे फोकस करेंगे और हम अपनी क्रॉस सेलिंग फाइनेंशियल सर्विस पे फोकस करेंगे. मेरा कमिटमेंट है ग्रोइंग कोर पेमेंट को रखने वाली कंपनी जो एक प्रॉफिटेबल, सस्टेनेबल, फ्री कैश जनरेटिंग कंपनी है वो बने और वो एक स्केलेबल कंपनी बने. ये हमारा कमिटमेंट है, ये हमारा उद्देश्य है.
Vijay Shekhar Sharma there at the AGM of Paytm. The stock is off the highs of the day, but one must remember that the stock has already risen almost 30% in the last 1 month. So seeing some bit of profit booking at higher levels. Time for a short break. When we return, we get you all the details on the new incentive schemes laid out by the cabinet for EVs and a lot more. Stay tuned. Back on the other side. Welcome back. On to an exclusive now from the US IBC Summit. My colleague Parikshit got in touch with NASDAQ's Executive Vice Chairman Ed Knight and began by asking him about his interactions with the SEBI chief, the finance minister, and the impact of the current government's policies on the Indo-US economic relationships. Let's listen into a slice of that conversation.
The trajectory here is towards, in a positive direction, moving to eliminate a lot of this friction, as you might call it. Some of the initiatives in Gift City, there was recently announcement of regulations that would allow companies to eventually list in the United States once they list in Gift City. But just taking a step back, the U.S. right now is the strongest economy in the world. India is the fastest growing large economy in the world, the two biggest democracies. And most important, and you see it when you walk around India, is the shared values that we have. The values that and priorities we put on family, the priority we put on the rule of law, but also the interest and the focus on innovative technology. That's what our workers at NASDAQ are interested in. They want to be part of a company that's engaged in cutting-edge technology so they can learn more and advance their career. Both governments understand that, and they're working together because our economy in the United States cannot thrive and grow just based upon what's going on in the United States. We need economic partners. India is a critical one. The same is true with India. They have to, your government has to find jobs for 1 million people every month, and capital from the global investor, which NASDAQ provides access to. We want to do a better job of providing more capital to invest in India through the products that we have working with investors all over the world. So we see a positive movement in a lot of areas. The recent budget initiative has investment in upskilling. It has a reduction in the corporate tax rate. It has other positive moves that we think will continue to provide opportunity for companies like NASDAQ.
Right. Now, US and India are working very closely on supply chains and having resilient supply chains, especially on clean energies, semiconductors, and certain critical technologies. What could ensure greater foreign investment flows from US companies into India? What would they be looking for, according to you?
Well, I think in part, on a very practical level, what they're looking for is that those who are already investing here have success with it. So one of the things we've been talking about at US IBC is some of the initiatives of our companies here and making sure they continue to thrive. Like Google, listed on NASDAQ, a member of the US IBC, has made a major investment here in this country. The rest of American business is looking at that. And if they succeed, others will come. But that will be based upon a lot of things, including the Indian government's continued investment in infrastructure, the Indian government's continued investment in upskilling, and the priority that we hear the Indian government is putting on manufacturing, electronic assembly, electronic product assembly, and the like will encourage more American businesses to come here.
And continuing with our coverage at the US IBC, Shireen Bhan is now in conversation with Biocon's Executive Chairperson Kiran Mazumdar-Shaw. Let's cut across to that.
Well, we continue our conversations here at the US-India Idea Summit. It is my pleasure to welcome on the program Kiran Mazumdar-Shaw. Kiran, always a pleasure. Many thanks for joining us here. You know, you've of course been part of the US IBC and trying to do what the private sector can do to further and converge the aspirations of both the US and Indian relationship. How would you quantify where things currently stand? What do you believe has materially changed?
Well, you know, if you look at India's positioning in the context of what's happening globally in terms of geopolitics and macroeconomics, I think we are very well positioned to basically play a very key strategic role with many parts of the world, and especially the US. In fact, most recently, they've also, you know, the Congress has passed the Biosecure Act.
Yes.
And that, again, provides a huge opportunity for the Indian pharma and biotech sectors to really take advantage of what's happening or what's going to happen as a result of the Biosecure Act. So I think India's capabilities are improving. I think our talent hub is definitely something that we can brag about. And I think we have scale in many of the sectors that we're looking at. So I think it's a good time for India, and it's a good strategic partnering time for both India and the US. So I think I believe that, you know, from all my interactions and efforts at USIBC, I feel this is our time to really forge this partnership to a very new level.
Well, this is our time, as you point out, but you preempted my question about the Biosecure Act, which has been passed by the US House of Representatives. And as the legislative process continues and takes its own course, explain to us the implications, the impact, the benefits that it could accrue to Indian companies like Syngene.
Yeah, so first and foremost, I think they have actually named companies which are directly Syngene's competitors in China. And they are very large competitors. So I think that would sort of push them back in a certain way. Of course, they have kind of, provided some time to, wean themselves off these kind of contracts. That is the US companies. But as you know, the US is the biggest market for contract research. And Syngene certainly is positioning itself to, reap the benefits of the Biosecure Act. So I think it's something that every contract research or CDMO company will look at. I think India needs to really invest in both infrastructure and in the R&D space, as well as in biomanufacturing. And as you know, the government recently announced the BioE3 policy. I think right now it's basically a very intent sort of focused policy. But I think we need to translate into action.
You talked about Syngene and the possible benefits for Syngene and other CDMO companies. What are you going to do now in order for you to be ready to leverage on the opportunity that opens up on account of the Biosecure Act?
Now, as you can imagine, the Biosecure Act has been in the works for quite a long time. And of course, Syngene has been in touch with many of its old customers and new customers to see what this would mean for them as companies. And we have seen a lot of interest coming our way. I think the number of RFPs we are receiving have more than trebled. So I think there are signals that companies are seriously looking at moving away from China to India in the research services space.
Is there an estimate of a number that you can share with us in terms of how you would quantify this opportunity over the next few years?
It's too early to tell, Shireen. Over the next few years, you're not going to see huge impact. But I think in the next 5 years, you're likely to see a big shift.
Okay.
And it could be, of course, multi-billion-dollar opportunities for Indian companies.
That could open up multi-billion-dollar opportunities. Let's talk about the US market, which, of course, you spoke of in your introduction. In terms of your biosimilar portfolio, Kiran, if you can give us an update on where things currently stand.
So, as you know, one of the real sensitive areas is insulin. And I think we're in a, sort of prime position to address that particular need that the US is currently perceiving, because there is a sort of signs of there being a challenge for the US because of the GLP-1 focus. So many of the insulin companies are, having to shift from insulins to GLP-1s, and there is a likelihood of there being a drug shortage of insulins. And, we are already seeing a big pickup for our insulin, Glargine, in the US. We are touching the 20% mark in the US already. So I think we are seeing an increasing demand, not in the US, but world over. I think this is a very interesting opportunity for us, because we are also the only company that has a portfolio of insulin analogs which are very close to approval. So I think it is really a very interesting time for us. So, of course, we have a portfolio of biosimilars which straddles both insulins and antibodies. Even in the antibody space, we are seeing a very good, performance in the marketplace, where products like trastuzumab are also touching the 20% mark. Pegfilgrastim is also touching the 20% mark. and we've got other products which we believe will also be very, very important for us going forward. So I think the US is a very important market for us. It is a market that is showing a strong adoption of biosimilars in general. The Affordable Care Act and insulins was even discussed at the presidential debate a few days ago. So you can see that the US is very focused on bringing down healthcare costs, and they can't do it without biosimilars and generics.
And that continues to be a window of opportunity that you will focus on. Well, speaking of opportunities, Kiran, you know, what we've seen with the weight loss drugs, with the way that Ozempic has now sort of become this miracle cure for just about everything, how are you looking at that opportunity? I mean, you do have a foot in the door, so to speak, but how do you see that playing out for you?
Well, you know, it is a very big segment. And, you know, what puts us ahead of others is that the technology is very similar to insulin technology, and we've mastered the insulin technology very well. And I think, of course, we would be the only company with this very unique combination of insulins and GLP-1s. We've already, you know, got liraglutide off to a start. And, of course, like every company, we are developing the others as well. And semaglutide, I'm sure you're aware, is going to open up in 2026 in certain emerging markets, and it's going to be a huge market. Of course, it's going to be a very competitive market because there are going to be many players, but we believe we have some good advantage because it's not just about, it's not a pill, it's a device, it's a delivery system that counts.
Shireen Bhan there in conversation with Kiran Mazumdar-Shaw of Biocon. Time to take a short break. More news and updates continue on the other side. Stay tuned.